Here's what's coming up on the Peak Financial Freedom Show with Jim and Dan.
So you have to use your assets that you've saved your entire lifetime, and you have to figure out how to generate income off those assets that will sustain you for both your life and your spouse's life.
So once we can make someone comfortable with the amount of risk they want to take, we then are able to build their income plan. And an income plan sounds complicated because it takes so many components together and it squishes it down, but we're going to make it very simple because we're going to put it all on one page. How do we now help someone understand how to use their money? We simplify it. We put it all on one page.
You should like and you should trust your advisor, but that's not what you hired them for. You hired them for their specific skill set so that you understood what your fees were or are going to be in the future. Not just the advisor fee, but all the different fees under the line, what we call the hidden fees.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey, thanks for tuning in this week.
We got 30 minutes of great information just for you.
Don't go anywhere. The show starts right now.
Jim, I'm so excited about this week's segment of We Fix Your Money. It's going to cover a couple different issues I think can help the viewers right now. One of them is people want to know, okay, how in the heck do I really create a comprehensive written retirement income plan? Because it sounds so complicated. I don't understand money, and now I have to understand a comprehensive written retirement income plan. And then we're going to talk about, let's call this lady Shelley as our hypothetical case study, and let's pretend like she's 69 and recently divorced. So we deal with a lot of people who are now having to plan their money on their own, don't we?
That's right, all the time.
Happens a lot. So let's say now she receives a pension and she gets Social Security, and she has a lot of money now after the divorce. She has about $3.1 million of assets. She has about $24,000 in the bank, which we don't think is enough. She needs more money liquid. What are some of the worries someone like Shelley would have, maybe the viewers right now, what are some of the worries they would have?
Well, she just recently got divorced, so she's worried about taking care of the money herself. She's worried about loss of income because she does have had a divorce now. She's worried about risks she's taking in the market and potential losses. Not having enough monthly income now that she's on her own, her money running out, and other things, Dan.
Not being able to stay in her house because, for her, if you get a divorce, you really don't want to change your life dramatically because you're already completely freaked out about what life holds for you. In her case, it was, how in the heck can I hold on to this house? She wants to make sure that she's not going to get killed with income taxes now being taxed as a single person, and she definitely does not want her lifestyle to take a nosedive simply because she got a divorce. And she cares about her kids. She's not sure if her husband will leave them any money, so she wants to make sure she gets to leave them money. Mm-hmm. She's had a broker for 20 years, but that guy dealt with her ex-husband, so she doesn't want to deal with that guy because he never paid attention to her, never answered her questions, never took care of her concerns. She's always hated losses and volatilities. I mean, down to her core, she hated them, and that's one reason why really her and her husband didn't get along. He was ultra-aggressive, she was ultra-conservative, and they've never had a written plan, and she always has wanted one. So for her or anybody else like her, what's the first step you take?
Well, the first thing we have to do is determine how much risk she has, and she admitted she didn't want very much risk at all. She was really concerned about markets. She didn't understand stocks and bonds really, really well. So we have to do a risk assessment. We use outside third-party research firms to do this on behalf of our clients. We give them the data, they come back with a risk assessment modeling. In her example, she had extremely high risk in her portfolio based on her risk appetite. If we have another financial crisis like we had in 2008, she was proposed to lose approximately 43% of her money, which was tremendous to her, which would have been a loss of about $1.362 million, which means she would need at least a 76% rate of return just to get back to even if that happened.
And that's assuming she's not taking any income out of paying the fees.
That's exactly right. So after we remodeled the portfolio based on her objectives, not ours, but her objectives, we reduced her hypothetical risk from 43.6% down to 4.2%. And rather than losing potentially $1.3 million, she would lose potentially $131,000. Much more palatable, much more acceptable. And now the recovery gain was only about 4.5% or 5%, something that we could achieve potentially if the market does come back.
So she still has some risk, and we point that out to her. We even put it in writing. This is what could happen.
Right.
but it's a lot more easy for her to handle moving forward without having to worry about her money.
Yes.
So once we can make someone comfortable with the amount of risk they want to take, we then are able to build their income plan. And an income plan sounds complicated because it takes so many components together and it squishes it down, but we're going to make it very simple because we're going to put it all on one page. How do we now help someone understand how to use their money? We simplify it. We put it all on one page. We're going to show them, and her, in this case, you, if you need some help, how to allocate the assets to give you a high probability that your plan's going to work. And you notice now this is one sheet. It's going to show everything you need to know about your future. We're going to take her from age 69 all the way out for 30 years, all the way out through 98. So hopefully she lives past that, but at least this will give us an analysis of what's going to happen for 30 years. It's going to then show her, if you look at the second red oval, in 2018, doing a plan, it'll show her where her income sources are going to come from. And if you go all the way over to the right-hand side, she's going to have $183,000 of gross income. She's going to have $15,000 of gross income per month, which will probably end up being somewhere around $11,000 to $12,000 of net income after taxes per month that she's going to have forever. What does that mean to someone like her now, knowing that she's going to have that?
Well, she was elated, obviously. Now all of a sudden, all of her worries were taken care of. She understood she still had risk in the market, but she was going to lose significantly less if we have a market crash. And more importantly, she knew her income was going to last the rest of her life.
And for her, because she now has divorced her husband, he's no longer family, but her two kids are. And she had about $3 million of assets, and we're taking out about 4% of her assets and income. So what that means is, if we just average a long-term rate of return to her assets of about 4%, what does that mean then, if we can get that 4% rate of return, that if she dies anywhere along the way, what's she going to probably be able to, hopefully with the possibility of leaving to her kids?
Based on the estimation, she'd have about the same amount of money when she passes away after she's taken all this income off her assets.
And that's what people want to do.
Yeah.
They want to use their assets for as much income that gives them the lifestyle they want, same things people are watching right now want, but they also want to leave money to their kids. So if this looks like something you'd be interested in, as far as getting a comprehensive written retirement income plan set up, call our office. We'll sit down with you for free. There's no cost to find out, do we think we can help you?
And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, I'm Dan Ahmed. My partner Jim Files and I are co-founders of Peak Financial Freedom Group. We are proud sponsors of this show. As investment advisor representatives of our own RIA, we are legally bound by a fiduciary duty to our advisory clients. Specifically, we owe our advisory clients an affirmative duty of utmost good faith, requiring us to provide full disclosure of all material facts and obligating us to employ reasonable care to avoid anything misleading. We design customized written retirement income plans for retirees and soon-to-be retirees. If you've saved a lot of money for retirement and don't want to lose it, don't want it to run out, and don't want to make a mistake with it, stay tuned. You're going to love the show. We want to help you protect your assets against large stock market losses, earn competitive returns without taking excessive risk, and create dependable monthly income that will last for as long as you live. Our goal is to help you stop worrying about your money so much by building you a customized written retirement income plan. We put everything in writing. And here's the best news. We will not charge you for your plan. You will never feel any obligation or pressure to work with us. It's always your choice. But if you do decide to become our client and you're looking for some growth without taking excessive risk, we get paid advisory fees on the money we invest for you. If on some of your funds you're looking for protection against stock market losses and need dependable lifetime income, and we use an annuity as part of your plan, we are paid commissions. That's why we don't have to charge you additional planning fees to create your customized, comprehensive written retirement income plan. Before you invest any money with us, we will tell you all the fees you will pay in writing. We believe in transparency. And after we build your plan, you won't worry about your money so much. Sit back and enjoy the show. Thanks for joining us.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's AskPeakNow.com, where you, the Sacramento area, email your questions into us, and we answer them right here on the show. Guys, I got some great questions this week. Jim, I'm going to begin with you, and I have Stephanie from El Dorado Hills, and she writes, my husband and I are both 66 and retired. We know what we want from our money, but so far no one has helped us do what we want. My husband and I listen to your radio show frequently and love your TV show. We currently use a financial advisor at our bank who has not been able to help us achieve our goals. We wonder, what is the difference between someone like him and what your firm does? Do you cost more to use? Can you really help us do what we want to do?
Well, Stephanie, great question. That is a question we get answered or asked every single day by people that are coming in seeking a second opinion. Number one, making sure that you understand all the components of your money will make you feel more comfortable. Number two, the advisor you currently have, they might be very, very good, but they have a different level of skill set. They've been there to invest your money. Hopefully you've grown your money over the years. They're trying to accumulate your assets. But now at 66 years old, you and your husband are at a different stage in your life. You have to make sure now that you bring aboard somebody that has a different level of skills, that they're able to take your money that you've saved your entire life and give you the protection you need right now for the rest of your life. That means they have to figure out how to make sure your principal's protected, because you don't want to lose money in a market crash. Number two, they have to design a plan that shows you where your income is going to come from. And when you're generating income, you have two choices. You can generate what we call maybe income, and that's income that you're generating off your portfolio. It might be there and it might not be there. Markets change, interest rates change. Or you can generate what we call certain income. That income comes from an insurance company that they pay you an income stream for the rest of your life. So what we do in the planning process is to make sure you understand your alternatives, make you understand how these asset classes work, and design a portfolio that meets your exact needs so that you and your husband can get through the rest of your life comfortable and knowing that your money will never run out. Thank you, Stephanie, for that question.
Jim, thanks for that. Dan, my next question is for you, and it's Bud and Charlotte in Lincoln, and they write, we called our broker last week and told him we didn't want to take as much risk. He said the only way we can get a high return is to take risk. He said if I invest long term, I should get 8 to 10% annual returns. This seems hard to do when for 2 years we haven't made any money at all. What do you think?
Well, Bud and Charlotte, thanks for this question. It's a great question. You said you're from Lincoln, so I'm kind of assuming you're retired, maybe living up in Lincoln Hills. And if you're in your position right now of being in retirement, you have to take less risk. You just don't have a choice. You no longer are in what's called stage one of retirement planning, which is called asset accumulation, when you're willing to take risk. You're okay with losses because you have enough time to make up those losses between then and the time you retired. Assuming you're retired now, you don't have time to make up these losses. And you'll always be told by brokers across the nation to invest in the stock market and you'll get that 8 or 10 or 12% rate of return. Well, you might in a single year, but overall, I just don't think that's going to happen. Because if you go back to the year 2000 and you go all the way through 2018, that's a time period of 19 years. You take the S&P 500, for example, the index only increased by 2.85% per year. That's 2.85% per year compounded before you paid fees, and that's because there was a big loss in 2001 and 2, then another big loss in 2007, 8, and 9. Those were two 50% losses that dragged down the whole return for that time period. So investing in the stock market doesn't mean you will get a high rate of return. It simply means your money is going to be at risk and there's going to be a lot of volatility. You have to find a plan that's going to give you risk somewhere in about the 5% range, preferably, meaning if the market crashes 50%, you don't lose more than 5% projected out, and then create an income lifestyle that will provide you all the things you wanted for retirement. By doing that, you'll be in a good position, and you really only typically need to earn about a 4% rate of return to make your entire plan work. So thanks a lot, Bud and Charlotte, for that question. Awesome, and I think a lot of people will be glad you asked that.
Dan, thanks so much. Jim, my last question is for you, and it's from Harvey in Auburn, and he writes, we've been planning to retire for a while now, and all of a sudden, our retirement date is 2 months away. Congratulations. We really want to retire, but we've gotten pretty used to having 2 paychecks for the last 40 years. How do people ever get comfortable with the idea of not having money coming into their checking account every month?
Well, Harvey, everybody has those same concerns. If you're close to retiring, everybody's trying to figure out, how do I supplement my Social Security? And I don't know if you have a pension or not, but maybe you do. If so, you're going to need other income to come in order to support your lifestyle. So you have to use your assets that you've saved your entire lifetime, and you have to figure out how to generate income off those assets that will sustain you for both your life and your spouse's life. There are different financial instruments that you have to consider at this point. The financial instruments you used up to this point, you were trying to grow your money, you're willing to take risk, and you're willing to accept losses because you had income coming in from both your paychecks. But now all of a sudden, those paychecks are no longer there, and your question was, how do I substitute those old paychecks for new paychecks? And there are ways to do that. That's obviously our specialty, is to show you how to generate income off your assets and also to make sure you don't run out of money so you don't have to worry about that every single day for the rest of your life. And if we do everything right, which we should, how do you leave, hopefully, money to the kids, charities, or other beneficiaries? So thank you, Harvey, for that great question.
Dan, Jim, thanks so much. If you want to have your question answered here on the show, it's super easy. Just go to askpeaknow.com, email that question into us, and we might answer it right here on the show. And don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an extra plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investment from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Welcome to this week's Peak University. And today we're going to talk about losses being very hard to recover. And Jim, in our latest book that we wrote with Jack Canfield, he's the co-creator of Chicken Soup for the Soul, who sold over 500 million copies worldwide. We're lucky enough to have him in our book. We discussed in detail how painful losses can be to the average consumer because they've never been talked about. The consumers out there, they're talked about how much they can earn, these huge rates of return, but they never are talked about how much a loss could hurt them. So you and I created the Peak Golden Rule of 5 to 10% to make sure people understand how losses and risk really work. Because we define risk as what?
Losing your money, period.
How much you could lose.
That's it. Now,
Right?
not whether you're conservative or moderate or an aggressive investor. That means nothing to us. How much are you really willing to lose in the next stock market crash?
And you got to ask yourself that right now, don't they?
That's
People
right.
listening, you have to now ask yourself, how much are you really willing to lose as an amount? So if you got $2 million,
Right.
how much are you really willing to lose? So why don't you start and explain what we call being naked in the stock market or having a no loss limit and what that means.
Okay, this is in the red zone up here. I think everyone will agree, if you've lived more than 20 years, we've gone through 2 50% crashes in the last 19 years. One between 2000 and 2002, and the second one between 2007 and 2009, where people actually lost 40, 50, 60, even 70% of their asset value. Now imagine, fast forward, you're now in retirement. If you lose half your money, 50%, let's assume you have $1 million of assets, and you lose half the money, you're going to lose $500,000. Your asset base dropped to $500,000. You actually need a 100% rate of return to get back to even, not 50%.
Well, think about our clients. A lot of them are very educated, very successful people that have saved $1 million, $2 million, $5 million, even $20 million of assets. These people are smart. And half of them literally think, if you lose 50% on your $1 million, you lose $500,000. You're down to $500,000.
Right.
If you earn 50%, most of our clients think they're back to even, but if you earn 50% on $500,000, where are you back to?
$750,000.
So you're short $250,000. You're down 25% if you lose 50% and make 50%. And is a 50% gain easy to get?
Very difficult.
Is a 100% gain easy to get?
Extremely difficult. In order to get a 100% gain, what do you have to be? Very
You
aggressive.
have to be ultra aggressive. And think about it. When the market crashes 50%, if you are in that position where you lose 50%, you're down here, the last thing you want to do is be aggressive because you're scared. You know you're probably not going to make it back, but the only way to make a 100% gain is to be aggressive, and that's the last thing you want. We call that being on a hamster wheel. You know how the hamster is running really quickly, making a lot of noise, but where does the hamster get?
No place at
No
all.
place.
And people have been taught their entire lifetime to stay the course, stay in it, don't get out. And we believe in that. That philosophy is fine if you're 20, 30, maybe 40 years old. But you got to understand how old you are right now in retirement or you're approaching retirement. You cannot afford a massive loss inside your portfolio.
No.
And it can happen.
Well, let's say you said, well, I didn't lose 50% in 2007 and 8. I lost 40%. With a 40% loss, your millions down to 600,000, you still need a 67% gain just to break even. If you lose 30%, you need a 43% gain. If you lose 20%, you still need a 25% gain to break even. And are any of those gain for recovery, Jim, 25, 43, 67, or 100, are those easy to come by and are they guaranteed? And how quickly will it happen?
Number one, they're not easy to come by. Number two, they're not guaranteed at all. And number three, we don't know how long it will take to recover. Will it take a year or will it take 15 years? Look at Japan. They've gone through 20 or 30 years of no recovery.
So what about then our clients that come in and they say they don't want to take much risk, and we create this golden rule of 5 to 10%, and we're going to then design a portfolio that if the market crashes 50%, we're somewhere in an estimated 5 to 10% loss. How does that make them feel, and what does it do?
It makes them feel really, really good. Designing a portfolio using different asset classes to mitigate your risk so that you can recover. Because if you lose, and what we try to do, ideally, if clients follow our recommendations, we try to keep our clients in this 5 to 6% loss potential. Because if you lose 5%, you only need a 5.3% rate of return to get back to even.
Walk through it. You lose 5% on $1 million.
Right.
You lose 50,000. It's still a loss. It's not risk-free. You still lose money. You're down to 950,000. 950,000 only needs a 5.3% gain to get back up to even, and that's a heck of a lot easier than a 25 to 100% gain.
Right. And if you're interested in more information, you can go to our website or call us.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, we will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Retirement True or False. Gentlemen, I have some great questions. Jim, I'm going to begin with you. I'm retired and I worry about my money all the time. And there's nothing I can do about it. True or false?
False. If you don't have a written, comprehensive income plan, tax plan, beneficiary plan, yes, you should worry about your money. But that's what we do at our firm. You have to understand how to position your money at this time in your life so you don't have a catastrophic event that will change your lifestyle in the future. You have to understand, most importantly, the amount of risk you currently have in your portfolio. Not that you're conservative or moderate with your money, it's how much are you going to lose potentially in the next market crash. We use research engines to determine this for you. Then you have to understand the fees you're paying, because fees can eat away on your gain over a long period of time. It can dilute your earnings and your portfolio value. Then you have to understand where your income's coming from. Will the income increase? Will it decrease? Will it go away? Is the income certain income? Is it maybe income coming off your portfolio? You have to understand your taxation. Do you have enough money to pay for your budget items? And more importantly, do you have excess money to help offset inflation and long-term medical care costs? You have to understand all this, and all this has to be understood and in writing by the advisor before you invest the money, not after you invest the money, before you place your assets, because this determines how you're going to select your assets by how you answer those questions.
Dan, my next question is for you. The stock market really doesn't suffer large losses very often, so I shouldn't be worried about a stock market crash. True or false?
Completely false. When you look back to history, let's go back to 1929. There have been 13 times that the market has had what they call a bear market, which means a loss of 20% or larger. 13 times. Doesn't sound like that many. That means it happens every 7 years. Well, these losses that have happened 13 times average almost a 40% loss every 7 years. So when you think about it, we're 11 years into this bull market. So we're 4 years overdue. We have to now take into consideration we're going to have these types of losses most likely based on this historical data. So a 40% loss every 7 years, that's a huge loss. And that happens all the time, because if you think right now it happens, and then we have 7 years down the road it happens again, and on, if you're a 65-year-old married couple, you should plan on having 4 more 40% losses happen during your lifetime. Not just one, 4 more. So think about what that would mean to your pot of money right now, your retirement dollars.
And you can position your portfolio to reduce that risk significantly. Most consumers don't understand that because they have a typical brokerage firm or advisor that has them strictly in a diversified portfolio. And you're at great risk when you have that. We believe in stocks and bonds. We do believe it.
And you're right. You can do that. You can adjust your portfolio before it suffers a loss. You cannot diversify your portfolio after it suffers a loss, because there's nothing that can be done after that other than you have to hang in there and hope your money comes back.
You know, guys, it's so important to know the history, because if the past is probably the greatest indicator of the future for the market, and if it keeps happening every X amount of years, why aren't you prepared for it? And if you're going to be retired 20, 30 years or longer, and chances are it's going to happen 2, 3, 4 times in your retirement, why aren't you planned up for it, right? Jim, my last question is for you, and it is, if I like and trust my advisor, it's perfectly fine and acceptable that they've not put the fees I'm paying and the risk I'm taking in writing, and have not given me a full written retirement plan. True or false?
False. You should like and you should trust your advisor, but that's not what you hired them for. You hired them for their specific skill set, so that you understood what your fees were or are going to be in the future. Not just the advisor fee, but all the different fees under the line, what we call the hidden fees in the mutual funds, the internal trading costs in those funds, these other fees that the average consumer does not understand. That has to be put in writing. Your risk has to be put in writing. How much you can potentially lose in the next stock market crash. You have to understand that as a consumer, so you're comfortable with your plan. Then all these details of all this information, not only risk and fees, but income, taxation, how much you potentially leave to beneficiaries, all this information should be put in a comprehensive written retirement income plan, tax plan, and beneficiary plan. The problem we have, and this is where the real rub in the industry is, there's not many firms that do this. Dan and I are mentors and coaches for firms outside of our business in the industry that actually bring us in to try to teach these advisors how to do this for their advisors that they manage.
Dan, Jim, thanks so much. Hey, if you want more information about getting a full written retirement plan for you, pick up the phone and give us a call right now, or go to our website. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey guys, great show this week. Thanks so much for tuning in.
If you have any questions or need any help at all, feel free. Give us a call at our office or go to our website.
And remember, at Peak Financial Freedom Group, we fix your money.
The preceding program is sponsored by Peak Financial Freedom Group.